Hey guys, this is Dantes Lindsay. I am the general manager of Ducks Trading LLC, as well as the lead trainer of Stockcraft. And today we're going to go over part 2 of the tutorial for Stockcraft. Before I go any further, I just want to say I am not a financial advisor, and this is for entertainment purposes only. Other than that, the stuff we're going to cover today is a little bit of the scanner, other ways to navigate through the platform, and we're going to dive pretty deep into the strategy builder. Just trying to equip you guys with the right tools to use the most of the update 3.87 of Stockcraft. We have new data and everything's running smoothly, and I just want to see and help you guys use it to the best of your ability. Enough about that. Let's get right into it. So first things first, let's get up here to the scanner. I'd like to start this off with like customs. So I have one custom signal in here. It is called range. And all this is just a filter that brings the stocks that are up 50% and has a minimum volume of 1 million. If you're wondering how I put that in there, I'll just show you. It only takes like 10 seconds. Come up here to custom indicators. I made mine a comparative because it was a filter. And, I have one rule, percent change, put my conditional statement, and I put in 50%. I'd added an extra rule to tie to it, and that's the volume. And then I add my conditional statement, and I said, I'm looking for at least a million. And this is mostly because I wanted to do stuff with pre-market. But the thing that happened is, if I come down here to legacy, we have pre-market data now. Yay. And it's good data because we're upgraded to like one of the highest data providing functions now. And so we should have a lot less problems. But enough about that. The way you want to read this signal from left to right, first 5-minute high is less than or equal to the high of the previous bar. And so each of these signals in the list, you want to read them the same way. You want to say the first statement, conditional statement, close previous bar. And so low, previous bar, close, previous bar, high, previous bar, pre-market, volume, previous bar. All right. So why do I keep saying previous bar? If you don't know why, I'll show you a visual. So if you come to, let's say this one. Let's go back to the stuff we talked about before. First 5-minute high is greater than or equal to the high. What this means is on a 5-minute chart, the first candle, there's going to be a high. We're going to take that high, and if it's greater than or equal to the previous candle that we set based off of the time frame, is going to meet our condition. And then it's going to flag a signal that brings up that stock saying that's what we will want. And so you're probably a little confused about what is the time frame. So if I go back a little bit, I come up here to time frame. This says a day. Let's say I want to scan through the entire NASDAQ and I want to search for that 5-minute high or that 60-minute high. It doesn't really matter. But in all these cases, there's going to be a previous bar or a time frame that I want to get a high, a low, a close, pre-market high, and etc. If I just want to go back a day, I'll put a day. If I want to go back like a month and find that specific high throughout that entire month, I look at the bar for the month. And so this time frame up here is just the size of the previous bar. And so the previous bar can be as small as 1 minute or as big as 1 month. And back to the visual. So in this little example here, I have 3 time frames. I have 30-minute, 1 hour, and 1 day. And so if you come over here to the open of today, you're going to see there's a little tick mark right here. That's our high of the day that we were referring to up here. That's our little high of the day after the open. If we use a 30-minute candle and go back, we see there's a high of the day 30 minutes before the open. Now, if we use the high of the day with a time frame of 1 hour on the previous candle, then we see that same place is the high because there's a downslope. And so what you should get by now is we're only looking for the high within that time frame that we set. And so in both these time frames, they have the same high. And now if we expand that to a day, you come all the way back over here to 24 hours before, And you're not going to find like a high over here. The high is the high of the stock within that time frame. And that's pretty much how that works. And so let's go back to the scanner. And let's say, this list is looking a little thin. So I want to expand the list by going to parametric. And yay, I see new signals. And now we have pre-market volume. What do I want to do with this? So we can click on this. And we see pre-market volume. It's a great indicator for the day traders that deal with morning pushes and stuff like that. We can change that V value and add another filter to just look for pre-market volume. And that's pretty cool. And so in this case, we're looking for a pre-market volume that's greater than the V value. And so I want to see at least 1 million when it comes to my V value. And, we can even make it go up to 5 million just so we can have some variety in our data. And I'll have it go in steps of 1 million. And what this does, it searches for 1 million, 2 million, 3 million, 4 million, and 5 million. And then it's going to bring us any results that are greater than 1 million, 2 million, 4 million, 5 million. And so you can customize this as much as you want, but this is just a scanner function. And so at this point, you're just bringing up the stocks that are above 5 million. But what you can do is you can always add an extra criteria to narrow down your number of tickers even more. Because you have to realize we're going through 4,511. And that's going to take a while if you don't use legacy, where the signals are built in, versus the parametrics, where it's going to be a little slower. And just to save time, we're not going to run any scans right now, but I think I explained how it should work. And just before we go into the next one, let's go into SMA. And so SMA, simple moving average, normally when you have a simple moving average, you have a larger simple moving average and you have a smaller simple moving average. When the larger crosses below the smaller simple moving average or above, that's usually a signal to go in or out of a stock. We're going to move over to the strategy builder. And then we'll go to SMA. Where are you? There you are. You go to SMA. You see there's an open to 0, which refers to yesterday, is greater than the SMA of NP, which N is representing the length of the period of the SMA. And if you know anything about the SMA, it's usually 10 days, and you take the moving average of those 10 days. As the new day comes in, the first day goes out. And so it's always going to be 10 days or whatever you set as your N in that period. And it takes the average of those days. And the P value is if the N is not a specific number, let's say it's various values, it's going to give you each one of those values as represented by P. And then P is going to be compared to the open of whatever you have your offset set as. And this is going to be the number of bars. And so if that doesn't make sense, that's okay, because I have visuals. And so we'll come down here and you'll see up here, there's a timeline of 1 day and there's a timeline of 1 week ago. These are fixed candles that you find in the time frame. And if we use the timeline of 1 day and we're using it in reference to open of the previous day is greater than the SMA of N is equal to P, you'll see the offset is equal to the number of bars we're backtesting. And if those bars are set on the timeline of 1 day, it's going to look a little something like this. Offset 50 bars equal 50 days. When you go into it on another level, it says min 0, max 50, steps 1. So it's checking all the steps between 0 and 50. If you change the timeline to a week, then those offset of 50 bars is equal to 50 weeks now. But it's the same thing when you put it in the data. Min 0, max 50, step 1.
The SMA of n is equal to the p-value.
And so n can be one number or n can be previous values. You don't really know, but you just know that it's going to equal the p-value. But that's what you're going to compare to the open. And so before we go any further, let's go back to the n, because this is the period at which you're setting. And so in our example, we put 10 because we had the offset going back 50 days. And so we want to keep consistent. And so when we do
SMA of 10 bars is represented by your input for the n value.
And so 10 days out of 50 is usually going to be done in steps of 5. So we have 5, 10, 15, 20, 25, 50. If you wanted to check a specific day, you'd have to use a specific number for n. And so you can put that in the min, max, and steps any way you want just to check that specific number. But for now, we have that range. And so this p-value is going to equal to the SMA of 5, SMA of 10, SMA of 15, SMA of, and so on until 50. And so that's all that really means. Back to Strategy Builder. So here in Strategy Builder, we should do a test. Before we do a test, let's go over a few other things that will help you navigate through the platform. Before we even cover what's in the Strategy Builder, let's cover what's in the settings. And so here you have full customizability to change the currency you want to apply, trade with only a cash account, run strategies across multiple markets and symbols at the same time, always calculate against random data. And so in our case, since we're quantitative traders, we're trying to always make sure our strategy beats random data and the randomizing of our strategy. And so I'm just going to collect that on as yes. If you have custom strategies that you built on Python, easy language, and anything that you just want to import into the platform, you have to come in here at some point and press yes on custom strategies. If you want to see some kind of edge when it comes to getting out at the end of each day,
Force end of day, exit just forces the strategy not to hold overnight.
but there's a better way to go about that too. And yeah, when you come back, you can easily just put in a max holding time of 1. So back to additional settings. The session time, that's just depending on what market and where you are in the world. Max rule strategies, this is the max rule for your regular simulation. And there's also going to be an extra filter that you can apply to your exit signals. There's also another filter you can apply to your exit signals. Let's say you wanted to just find any exit signal, no matter how many that you had put on there. You will put in single for you to exit the entire strategy. Let's say you wanted to have more of a little variety. You would wanted to select the best strategy. This one would take a lot more time, but it may be a little more fruitful. It's something you pretty much have to test. But for time, I'm just going to keep it on single. You come down here to continuous simulation. This one's a little more powerful because it can use more than 4 parameters like we can up here in the regular simulation. Down here, you could do over 10, but I wouldn't push it past 10 because at that point, you won't get a lot of useful base symbols. But it's possible to go over 10 parameters at a time. Same thing with the exit rules. We usually keep this to 1 because you only need to have 1 exit signal to exit the strategy. But just in case, if you have multiple parameters and signals that you want to use as your signal to exit a strategy, it only needs 1 to exit the strategy, but you can have as many as you want, and you can set that here. Now, when you come up into this area, this is where, depending on whether you're in the penny stocks or whether you're in futures, Forex, and stuff like that, you can change how you do your position sizing. And this entire area can add in a little more realistic trading in your backtesting strategy. And so in this case, you stick to per trade if you're in contracts, and you stick to per share if you're doing penny stocks. Or not necessarily just penny stocks, but if you're doing stocks. Now, slippage, that's where the realistic part comes in. You can put in whatever slippage that you want to have when it comes to executing your trades. Same thing with delays and commissions. I'll keep my account at 50K for now, but if you guys want to simulate something a little bigger or smaller, I'll leave that up to you. Here on enter on and enter, in this area where we have enter on and exit on, this is how we think about the next candle or bar that's created. And so we have everything on next open because we're dealing with Japanese candlesticks. And so there's always a translation of time, and they're going to look at the previous close and determine whether they should enter or exit. And so if that doesn't make sense, again, that's why I'm here. So let's go into another visual. So here we go. If you go into enter on, next open, there will always be a close because it's a Japanese candlestick. So after a certain amount of time, a candle's made. After a certain amount of time, a candle's made. And the same thing happens again. And we're going to look at the close of that candle. And then the strategy is going to read, should I make an entry or should I make an exit based off of that close? Now, the only other time that you want to put enter on towards close instead of next open is when you're dealing with Renko bars, not Renko candle, Renko bars. And that's because that deals with price action.
We use next bar open because bars are calculated on the close by most platforms. The exception to this rule is Renko. Renko bars do not have a high or low, like a candlestick. The high or low could be the open and close. Bars on Renko do not form until the price has moved a certain amount, which is kind of predetermined. Thus, in order to get a proper backtesting result, you must use this bar's close.
And so I hope you understood that. And so we're going to go back and continue. So down here at out of sample and in sample data, this is where you can tell what part of the data do you want to build your strategy and what part of the data do you want to test your strategy. And so do you want to test it on the older data or do you want to test it on the newer data? And if you don't get that, again, I have a visual. So let's go into this. So if you have it set to end, it's going to build the model on the in sample data based off of the percentage that you set at the out of sample in the strategy builder. And so let me just show you a quick example where that is. So down here where it says out of sample percentage, we have it set to 30% because that's what the textbooks say. You come back to my visual, and then if we know that n is equal to 30%, out of that 30%, we know that 30% is going to be tested on the out of sample data. So that means 1 minus whatever percent we put. So in this case, it was 30%. That means 70% is going to be tested on the recent data because, again, we have it set to the end. And that means we're going to build a strategy based off of the first 70% of the in sample data. And then we're going to switch over to the out of sample data, and we're going to test it on the most recent 30%. And so in total, that's the 100% that we're working with. And now if you switch it to begin, you reverse that relationship with how it views the data. Now we're going to take that 70% and we're going to build a model off the in sample data using the ending portion. And then we're going to use our model and test it on the ending portion of the out of sample data. And that's all that means is, do you want to test it on the recent data or do you want to test it on the older data? And the book recommends 30%, but I'll allow you to come up with what you want to test. Back to the strategy builder. So now we went over a decent amount of the settings. Last few things would be delayed entry. So this would be something you want to look at if you have some signals and strategies outside of the platform, and you want to delay it by a couple bars. And so, you want to delay one of your strategies by 1 bar, 10 bars, 100 bars. It really just depends on like your preference. Let's say you want to use ATR, and this is where the size of the ATR is. And let's say, you don't want to do it in terms of 20 days ATR. Let's say you want to transfer this into like futures, and you know that futures have like a 23-hour market. And so, this is in days. To convert this 20 days into a 60-minute candle, that you will use on the futures market, you have to multiply this by 23, because you have 20 days. There's 23 hours in the futures market. So 20 times 23 is equal to 460. And the thing is, I'm not going to really use that right now. So I'm going to keep it on the 20-day ATR for me. Rebalance. This basically takes a basket of strategies and it lists them in a ranking order based off of whatever mining function that you're trying to use to rank these. And then it continues to re-rank these materials based off of the rebalance period that you set, whether that be annually, quarterly, or monthly. This is more advanced stuff, so you don't have to know about it yet. So let's go back to the strategy builder. Now, we just went through the settings. We haven't even touched anything in the strategy builder yet. Let's end it here for today. I'll get into the strategy builder next video. I hope you like what you saw so far. Next time, we're going to try a strategy. I promise. But if you like what you saw, like and subscribe, and I'll see you in the next video.